turn the economy around as the administration hopes it will. Our next guest says the new plan might really only lead to inflation. And we're getting a sign of that today. Joining us now is Rady. He is CEO and portfolio manager at Rady Asset Management. Great to see you, Harry. So already, just in the past 3 months, U.S. money supply has grown at a 20% rate. 20% in 3 months. I mean, we may double the money supply over the next 12 months. How can that not lead to big inflation?
Well, first of all, it's great to see you guys again, but you stole my thunder a little bit. I'm really worried that with the government printing trillions and trillions of dollars with no end in sight, that foreign buyers of long-dated treasuries are going to get a little spooked and demand a higher risk premium, irrespective of inflation. I think that the U.S. government's balance sheet is finally, for the first time in history, I think people are starting to have concerns, credit risks concerns about the U.S. government.
Harry, listen, I know that it's very worrisome what we've seen here, but this is not a surprise that we would start to see inflation. We had Howard Lutnick of Cantor Fitzgerald on actually pinpointing which time next year we will start to see inflation rear its head once again. But let's get specifically to the stimulus. There are people on both sides of the aisle who believe that something like this may be necessary, at least for job creation, but staying away from handing people checks where it just goes off into the ether. How do you think it should be sort of molded and crafted?
Well, I agree with what you're saying. I think that the best way to stimulate the economy is to put money back in the hands of the consumer, the people who earn this money. I think we need to have significant tax reform. Not just a little, not a balance, but significant tax reform. And we're having a real crisis of confidence. And I think it needs to happen before April 15th. I think that whether it come in the form of corporate tax reform, which is really a double taxation, a flat tax, one way or another, money needs to go back in the hands of the consumer. And I think that relying on the government to replace the consumer is a mistake. The lowest frictional costs occur when you put the money back in the hands of the consumer, the people who earned it.
Well, I'm with you on tax reform all the way, but I got to tell you another worrisome thing, as if we didn't have enough to worry about, is how accommodating the Federal Reserve is to the Treasury now. Usually when the Treasury is spending money, if you have a responsible head of the Fed in, they hold down the money supply so we don't have outrageous inflation. In this case, the Fed is just essentially become an arm of the Treasury, just floating the paper out there. So not only is the Fed itself putting out a lot of cash, but they're accommodating the Treasury in putting out a lot of cash.
Yeah, I agree with you. As an American, I'm optimistic that the new administration will do a good job. As an investment manager, my job is to manage risk. And so we are currently very bearish on long-dated treasuries. And one way that we're protecting the portfolio is, we're short long-dated treasuries. We're really worried that the supply issues, the risk issues, there are just too many concerns.
Harry, we've got to leave it here. We will revisit this issue as the details become available. Harry
Thank you very much, Harry.
Of Rady Asset Management. They're number one.
Thanks for having me.